Hello everybody, this is Toni Turner and welcome to the market now as of Friday, October 30th at about 12:15 p.m. Eastern. Well, stocks resumed their march downward today after a brief reprieve this morning. U.S. stocks are on pace to post the worst month since last March. Despite better than expected results from big tech companies, Amazon, Google, or Alphabet I should say, Facebook, Apple, and Twitter, concerns about COVID-19's effects on the global economy resulted in sharp declines for all except for Alphabet, which gapped up this morning but has started to fall since then. So on that somewhat not as cheerful note as we'd like, let's go on to three charts that could give us some insight into the week to come. Now, when I captured this chart today, as you know, this is a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. Now, when I captured this chart today, the SPY was trading at $325.73, or about $32.57 on the S&P 500 itself. Now, the green line on this screen is the simple 50-day moving average. The red line is the 20-day, and the black line is the 200-day moving average. And as you can see now, the SPY is back down below this 50-day line. We wanted it to hang out above that, but it couldn't do it. Now, since the SPY made the last new all-time closing high on September 2nd at 357.70, we know it slid south. It hit support here at about 320 back in mid-September. Then it rose back up to October 10th here. And as you can see, it's made a lower high, which isn't as promising as we'd like. So since it made that lower high, it came back down here throughout the first part of October, then fell back down below the 50-day moving average, which is today coming in at $339.59. So it's fallen back below that. And again, as I said, it's trading at 325.73. Now, because of this lower high, that gives us some caution here. We also know that the SPY needs to hold support, this prior support in September. It needs to hold that support at 320, and especially the 200-day moving average, which is now coming in at $312.39. So it's got to hold here to stay positive, to stay in this this move up that we've been in since March. Now, what we see here is if the SPY comes down and closes below 320, then it will have broken that support line, and we could look here at a potential shallow, which is a good thing, a potential double top. Now, a double top is a top reversal pattern, as you probably all know. That means price has been moving up in an uptrend, moved up to a high, pulled back, moved back up to a high similar to or within 4% of the prior high, then come back down and broken. Well, if you call this an M, like the letter M, a capital M, if it breaks support of the middle part of the M or the point of the M here, then it is called a double top. So then what do we do? Well, if you take a measurement of the from the all-time highs up here down to the midpoint at 320, then if you take that and move, say you can pick up and move this line, or you can do the subtraction, either one. It takes the measured move, which means what could happen. Doesn't mean it has to happen. Please don't think it has to. But the measured move would come down to about 280 on the SPY. If that were, now, does that mean it's going to fall all at once? No, it does not mean that. Most times when you see a double top like this or any top reversal pattern, it'll fall, then there'll be a relief rally, and then if it's to start falling again, I have to draw off this chart to do it, but you see what I mean. It's not going to be a straight fall down. And there's a little bit of an I hope next to that. But it doesn't mean it's time to panic. But if it falls below the support area, it does mean it's time to get more cautious and certainly firm up your protective stops and maybe even take some profits. So in the coming week, as you know, we're still in earnings season, and of course we have the election, and it's anybody's guess what's going to happen right after November 3rd. So if the SPY can stay above 320, that support line, and especially the 200-day moving average at 312, if it can stay above that support level there, then we could say, all right, maybe it trades down here in a range until perhaps we can start moving up again. Depending, a lot of this depends on COVID, the news coverage of it, and what happens with that. This is a really good time to make sure your protective stops are in. And remember, please, missed opportunity is a whole lot better than lost money. With that, let's go on to our next chart. As we usually do today, we're going to look at a chart of the Invesco QQQ, symbol QQQ. This is the ETF that represents the Nasdaq 100, as you all know, a major index on the market. Now, on Thursday after the bell this week, top components, Apple, Amazon, Alphabet, and Facebook announced their earnings. And Alphabet is the only one that's positive today. The other three gapped down pretty dramatically. Twitter did as well. Excuse me. Now, when I captured this chart today, which made the QQQ come down. When I captured this chart today, the QQQ is trading at $269.45. Now, it too touched a new all-time closing high on September 2nd at $302.76. It then slid south down below its 50-day moving average, not quite as far below it as the SPY, but did fall down below the 50-day moving average, which was rising, which is positive, then bolted back up to its October 12th high, a lower high from the last one, and this one was at about 298. Now, since then, it has slid back down, fallen below, again, the 50-day moving average, which is now coming in at $280.89. So it's back below that, and this 50-day moving average is kind of important because a lot of institutional traders use it to think positively about a stock or an index if it's trading above the 50-day, and maybe negatively about it if it's trading below it. But it's just another indicator to keep in mind. So our next support here, this is the support in September, 261 is what we're watching. That's why I drew this horizontal trend line here. And again, the QQQ is now at 269 and change. So it does have this potential support area at 261. To remain bullish, we need the Qs to remain above 261. Or if it doesn't, if it closes below it like the SPY, then we could potentially see, and it's a shallow one, meaning it's not too bad, but if the QQQ comes down and closes below it, we could see a double top here. And if that measured move, which is you calculate it by doing this, and you can subtract, then pick this line up literally, kind of, sort of, and move it down to 220 would be where the measured move would take us. Again, it's sincerely doubtful that it's going to move straight down. It usually, double tops like this usually move back up and down a couple of times. And again, it may not do this at all. It's just one pattern in technical analysis that we look at and try to learn from if and when it happens. So please keep your protective stops in place. And if the going gets more tough, especially if you're a novice trader, please do not hesitate to head to the sidelines until things cool off. Our final chart today is the VanEck Vectors Uranium and Nuclear Energy ETF, symbol NLR. Now, I'm going to tell you guys right out of the gate here, I went through, probably 100 to 150 ETFs and indexes and so forth, looking for something that looked positive to get into on the long side. today, and I'm going to tell you that it was hard to find good choices. I just want to throw that in for what it's worth. It was hard to find good choices. I did, though, however, look positively. If it holds and with very small share size, I'm looking at the VanEck Vectors Uranium and Nuclear Energy ETF, symbol NLR. Now, the NLR has 25 international holdings. It's an international ETF. The top components are Duke Energy, Dominion, Exelon, and Entergy, and other holdings from other countries. Now, when I captured this chart today, the NLR was trading at $45.40. Now, that's after back here it made a relative high in February at $51.91. Way back here, as you can see toward the left side of the chart. Then it fell like a stone down to lows at 33.52, but then it rallied just as quickly. It finally made its way back up here, jumped back over the 50-day moving average back in May, and then rallied in June up to about 46. So it made this move here up to there. Then it started moving down. Actually, here we can draw a triangle if we want to, but it broke out of that triangle, which is a positive thing. It broke out of that triangle, then came up and made this high in October, a little over, just almost up at 48 here. So now we can read, now we have this high, so we can draw this newer trend line, this blue one, and say, okay, got it. Now the NLR is not a day trading entity at all. It doesn't have the volume for it, but it's something that I will look at as a possible little longer term position, but it has to obey. It has to stay where I want it to stay, because this market is could get crazier, and I'm not in the mood to lose any money with anything right now. So it is again trading today at $45.40. If the NLR can remain positive into the coming week and above the 50-day moving average, which is coming in right now at 45.18, it's just sitting on top of it. If it can remain above that and the 200-day moving average, the black line is coming in at 44.58. So if it can stay above all this, and we've got a trend line down here too, if it can stay above all this and start moving higher in the coming week, no matter what else is happening in the market, if it does that, I will add a very small position in my portfolio. I will place my initial stop down here below the moving averages and trend lines at 43.50. When and if, I will, again, small share size, when and if the NLR breaks above 48, I will probably add more shares to my position. Of course, by then, my stop will have been turned into a trailing stop. So you may want to keep an eye on the NLR during the coming week. And now let's go on to final thoughts and some ideas. But before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You will love my simple yet powerful strategies devoted to swing trading, trend trading, bottom fishing, and much more, because they will help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right here, or simply click on the orange button below. And now for some final thoughts and a question for us today. We usually start out this section with a question. Our question today is, do I think of the stock market as an arena of opportunities, or do I think of it as a scary place where the market is out to get me and my money? Opportunities or a scary place? Now, you all know this truth. If you look at your world in general by looking at it with positive expectations of having an enjoyable experience, that's pretty much what you're going to receive. If, however, you see your world as an environment of difficult situations that you can never overcome, you know what? You're going to be right then as well. In the same way, if we look at the market as a land of opportunity, or if we see it as a huge, overwhelming, and frightening place, either way, we're going to be right. The best way to approach the market is to be fully armed with discipline, knowledge, and experience. And you can't get the experience unless you have the discipline and keep gaining knowledge. So approach the market with discipline, knowledge, and the experience you accumulate, and then find a place. I could call it a corner. Find a corner that's perhaps a group of stocks or ETFs where you feel comfortable. Maybe it's a watch list of 5 or 10 stocks that you feel you kind of know what they do and when they do it. And then stay there. You'll paper trade if you're a novice and can trade conservatively, meaning small share size, until or if you feel confident enough to make your circle bigger. Maybe you add higher beta names to your list from different sectors, but stay small as long as you want to. Heck, I used to know a guy back in the day when GE was trading at about $60. As you can imagine, this is a long time ago. But it's the point here. The point is all he did all day was trade GE. And you say, oh my gosh, you're kidding. No, because he knew pretty much. He knew what GE would do day in and day out, and he just took small profits here and there, but he rarely ever took a loss. And if he did, it was a very small one. And if you think about it, your goal as a trader is to make more money than you lose. And so find a place that maybe you even know something about. Maybe you've been in retail or banking or a sector industry group like that. But find yourself a place where you're comfortable and stay there until you feel like reaching out a little higher. Now, every day before you start trading, please take a few minutes to turn your attention inward, and review how you feel. Scan. How are you thinking? Is your thinking constructive, strong, and confident? Are you happy? Are you sure of the plan or plans you're going to apply to your trades today? Can you visualize yourself entering trades at the right time, establishing a protective stop immediately, and then managing those trades successfully? Picture yourself doing this. Now, if any of those statements don't ring true before you start trading, consider rethinking your approach before you enter the market. If you're overtired, or you don't feel well, or you feel at all negative about your day, please don't trade until you feel better. When we trade, our mental approach to the market will color our perception of the market, and it does determine our actions. So make sure you feel constructive, calm, and confident, and view the market as a land of opportunities. This will give you a good start to your trading day and help you trade more successfully. So finally, if you want to become a consistently winning trader, check out our easy-to-learn yet powerful online training programs that will help you increase your trading profits from now on. Just click on the button below for more information. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.